And we're live. And Carlos, you got some kind of crazy thing going. It's David Berry with TexasInsurancePro.com with my good companion, my sidekick, my partner in crime, Carlos Salazar. Say hello, Carlos.
How you doing, my man, David?
I'm
Your
doing
partner
good.
in crime, and
What was that?
your partner in crime.
Absolutely. So today you said that you wanted to talk about business insurance as it relates to the construction business, the construction industry in the state of Texas. So I thought I'd let you play Stump the Agent because I can't talk as well today. I got cramps in my hands from doing a lot of exercising and what have you. And let's just jump right into it. Let's talk about it. What do you want to talk about today with the construction insurance business?
Let's talk about contractors. But first of all, we're ending the year, and now we're into new business opportunities in 2019. And hopefully these new contractors will generate more business with our assistance as well.
Okay, yeah, that's true. I mean, we always want that to happen. Yeah, I mean, normally, like in Texas, you have normally when the weather's bad, a lot of contractors will drop their insurance or they wind down at this time of the year. But in Texas,
That's a mistake.
I'm sorry.
That's a mistake.
Well, that is a mistake, and but Texas, we kind of have a unique market. And one of my other businesses that I have a construction company, and we remodel houses, and we have our own properties. And one of the things we haven't done is we haven't slowed down because the weather is still good, so we have to still carry the commercial insurance. But for those guys that are out there that are say they didn't have a fourth quarter, say you were a landscapers really come to mind because a lot of those guys in the fourth quarter, when the leaves fall off, they do tree trimming or they'll do some other things. Let's just jump right into it and say, okay, at the very root, let's talk about a landscaper because that's a small business insurance that there's a big need for. And we had a case the other day where if you can kind of refresh our memory of what happened on that one. Well, the guy, his company was like landscaping and excavation, and kind of refresh my memory or tell everybody what happened.
Well, what happened was he does landscaping. It's clearing of the land, and that's mainly it. But on his business, he has excavation in there.
Okay.
And in the underwriter world, in the insurance, where our clients don't talk to the underwriters, where we communicate with the underwriters, they're looking excavation. Okay, that's another risk. Excavation, what? Like 12 by 12 feet, that's true excavation.
Yeah, I mean, to kind of put it in layman's terms, whenever we look at commercial risk, and especially small businesses, a lot of small businesses like to say, okay, I'm David's landscaping and excavation and tree trimming and horticulture and drywall. And so what Carlos is talking about is that it's very difficult when you're one of those guys that has either a website or business name that has all of these different classifications. Think of it this way. Everything that you say you do is a different type of business in the insurance world.
Exactly.
So in the case that we were talking about, I mean, you were talking about this guy. He actually did landscaping, which was move a little dirt and mow yards. That about right?
He didn't even mow yards. He just has a little bulldozer, little bobcat. He just clears the land, and he just hauls away the trash, whatever he's clearing the land.
Okay.
For the developer or the contractor.
So he does a little land grading, is what you're saying.
Land grading, that's it.
And so when people come to us as a business, with small businesses, one of the things we have to do when we're doing, like a general liability or what have you, is we have to properly classify the business. So in this guy's case, you have to ask yourself, is he landscaping? Is he excavating? Or is he land grading? Because land grading and excavation may be a different classification than landscaping. And right. So, because landscaping could move a little dirt in someone's yard, plant stuff, put your sod down. So landscaping would include moving a little bit of dirt, and then on top of that, maybe planting stuff and putting sod down. Versus a lawn maintenance guy is a different classification versus a grader is a different classification.
Correct. There's two different ball games. types of balls.
So when that happens, what happens is in the commercial world, and you're shopping around for business insurance, you know, when you're looking around for this, you have to make sure and make the agent understand that. So we like to ask very detailed questions for that reason, because if we don't ask those questions, then the underwriter starts going, wait a minute, you're doing landscaping and excavation. What kind of how much excavation are you doing? Let's kind of role play. It's like, hi, I'm the underwriter. And I say,
Right.
Carlos, well, you're doing landscaping and excavation. I know what landscaping is. How much excavation is he doing?
Excavation, he's just maybe doing like a 2-foot trench or something. And
Does
that
he
was
have
it.
does he have any big equipment that he's using to excavate?
No, it just little backhoe. That what he does is little mini one.
How far down does he dig when he digs holes?
It's just like no more than 2 feet.
Is he grading any land for any driveways or sidewalks or garages or anything, or foundations or anything that we need to be exposed to?
No foundations. It's just grading of the land for developers
So those are all
to build the new home.
What was that?
To build the new home on top of that land.
Well, see, that's land grading. That's not just excavating. That's not
Right.
that's not landscaping.
Yeah, it's just land grading. That's all. It's his title is excavation and landscaping, well, on his business, but all he does is just grading of the land, clearing of the land.
So he's not a landscaper. He's a land grader. But he tells you that he's a landscaper, but he doesn't mow yards. He doesn't plant shrubs. He grades lands for foundations. So we need to look at a totally different classification for this construction risk. And so the underwriter is going to look at it and go, what percentage of land grading do you do? What percentage of landscaping do you do? And you have to say, well, I only do land grading. And if I do landscaping, I'm not doing any. Well, then the underwriter is going to say, well, why do you have it in your name?
Exactly.
Why is it on your website?
He threw a wrench in there.
So that's a challenge that we have. And so what happens is if we don't do it right, then we run into a situation that if we would have classified him as a landscaper and he would have had a claim because he was grading land and someone got injured, because your general liability is slip and fall coverage, bodily injury, property damage, fire, legal liability, medical payments, all of that stuff. But he's doing land grading, and we rated him for, by the way, go Cowboys. We rated him for landscaping. What's going to happen? His claim is going to get denied. Right. So when you're a construction risk, before you shop for construction insurance, you have to be real careful and make sure you can explain that to a person that, yeah, my name says this, but I do this. And so what we have to do in a case like this, because I might have been able to get landscaping by itself on an admitted piece of business.
Right.
It's real easy. I might have been able to get land grading by itself on an admitted piece of business by itself, possibly. But since I added two of them together, now I have to find an insurance company that wants to do both of them together on one policy because his business says David's Landscaping and Excavation. So a big piece of advice that I would give all of the guys is that if you do this, then we're going to have to rate you properly. If you're this type of business, we're going to have to rate you for 1% exposure, if any, for all those other things that you think you could have done. I could do landscaping when it's slow. I could do tree trimming when it's slow. I can do land grading when it's slow. I can set forms for foundation when it's slow. I can do this because I'm smart. I'm a small business guy. I do all of this stuff because I got the tools to do it, and I got to make a living.
Right, but then he's got different types of risks right there. Tree trimming and clearing the land is two different. You know,
yeah. One is digging, one is climbing.
Yeah, exactly.
And that's the same thing with when you have in a construction business, workers' comp works the same way. If you're going to do all of that stuff, generally, like if I were going to write a Texas Mutual policy and the person was a landscaping company and they have drivers that drive and landscapers, I would just rate it as a landscaping company. And I would get all of the payroll based on that landscaping company. And I would get all of the I would get all of the revenues for landscaping. And if I could do one classification, I could write the general liability, I could write the workers' comp, and then I could also write the commercial auto for the stuff that they're pulling because they're going to have a long trailer to pull the land grading equipment, right?
Yeah, exactly. But go back now that you just hit a key point, commercial auto. What kind of autos and what's he driving? He could have a 3500 heavy duty pickup plus he could have a dump truck.
So just hang on there. Hang on. We're gonna go there. So
Okay.
all of those risks are all of those exposures. If it's just one classification, it's much easier to write that business than the guy that says in his name, on his business card, on his letterhead, on his website, or something, or one of the several places that I do all this stuff. Yep. There are actually companies out there that what they do is they actually will set up two separate companies, two DBAs, two LLCs, two corporations, two tax filings, or whatever the case is. The insurance company doesn't care about your taxes, but they care about the business name. They care about the entity. So if you got an LLC over here that does land grading, and you got an LLC over here that does excavation, they have two different, or that does tree trimming, and another one does another classification. If you name them differently and you operate them differently, and you got a check cut over here to this one and a check covered over here to this one, then we can rate those separately, and it makes it easier to get insurance, even though you're carrying two policies. For the commercial, for the general liability, for the workers' comp, a lot of times we can include it all on the workers' comp. But the commercial auto, we put it all together as one because you're driving to job sites. But on general liability itself, you actually have to make sure that it's like a drug that cures cancer and diabetes and epilepsy and all of this other stuff. There are very few drugs that have multiple purposes, and the same goes with insurance policies.
Right. Just like our past client that was classified for drywalling. He did drywalls and tape and bed. We got him classified right. Went off and started doing plumbing and flooring.
And he had a claim.
He had a claim, and we called him and called him. Hey, it's time to renew your policy. Time to renew. But either way, he wanted to file a claim. I said, look, buddy, you're not you're not classified to do plumbing and flooring. So,
and in this guy's case, I mean, we take the payment. We say this is what you're classified for. If you're doing something else from this point on, we can add that classification to some policies. But then before you add this to your policy, if you have a claim, then the insurance company is going to deny that claim. They'll take the claim, they'll want to take care of you, and then they'll send a letter to the client, to the claimant, and say, sorry, we can't help you because this was out of the scope of work that we're insuring this person for. It's excluded.
Exactly.
So in a case like that, then what do you do except get sued and pay it out of your pocket? So the biggest piece of advice I can give a small construction company that does a lot of stuff, the electrician that does plumbing, the plumber that does carpentry, the carpenter that does demo and carpentry and general contracting and so forth and so on, is to stay in your lane on these different businesses and pick your number one moneymaker if you possibly can. Because that insurance certificate that I write, that insurance policy that I write you, wouldn't be worth the paper that it's written on.
Right. That would fall under what would you say a remodeler? Because a remodeler would do a little bit of this, a little bit of that. What are your top three? Let's get that classified. Stay in those three lanes.
Now on admitted business, which is business that's, and it's important when we're talking about construction, we have admitted business and we have non-admitted business. To give you an idea, admitted business, for those of you who don't know, admitted business is business that's admitted to do business. They have permission to do business in the state of Texas. So what that means is that if you have a claim with them and that company goes out of business, they're backed up by the Texas Guarantee Association for up to a certain dollar amount for your claim. So that means that all of the Travelers and the Hartfords and those companies like that, BTIS and 5 Star and those companies out there, they have admitted papers. So if they were to go out of business, your claim is going to get paid. But then say you get a Lloyd's policy, Lloyd's of London, a risk retention group policy.
Including non-admitted?
Those are not admitted.
Right.
And if that company goes out of business or for some reason loses their ability to do business, the state doesn't assign them. The Guarantee Association doesn't back them up. That policy, you just lose your money. So when we're talking about insurance companies that do a lot of that can write your plumber, your electrician, your carpenter, your AC guy, all of these guys are all on one piece of paper. And something when it comes to that, a lot of times what ends up happening is we have to write that on that non-admitted paper because it's a more complicated policy, comes with more stipulations, more exclusions, and also they want the payment up front. There's all kinds of reasons why it's difficult to write those policies. And so what you want to do is if you can stick with your number one, it makes it a lot easier for you to get that admitted piece of business that they do the billing, do the automatic renewals, guaranteed by the state, all of that good stuff, to where you have a stable rate, a stable policy, and you're not worried about whether or not refilling out paperwork every year.
Right. Well, that's where we come in. That's where we come in. And sometimes they get frustrated because we're asking a lot of questions.
Mm-hmm.
When did you start? How long have you been in the industry? What's your experience in the industry?
Mm-hmm.
You know, have you had your prior insurance? Who did you have it with? Mm-hmm. Did it cancel? What was the reason or what happened? You know, we ask all these questions. Sometimes they get a little frustrated. Say, man, why are you asking all these questions? The more questions we ask, the better we can get you rated.
Yeah, it's easier to get us rated. It's easier to write the policy, but just know that we're not asking it just because we want to pry. But the reality is that when you're shopping for these policies, whether you're a seasoned veteran or what, when we're asking these questions, it's good that we ask these questions because that means that we're actually trying to look into your business and make sure we do it right. So. And here's some things that you got to look out for when we're asking. Let's just start with general liability.
All right.
General liability is based on a rating per exposure. What I mean by that is your exposure. Say we're like we said, a landscaper, and then we're gonna look at a dollar amount. Since they don't pull your credit on most of these, since they don't have a centralized database that all of the insurers are reporting to yet. What happens is they do instead is they figure out how much business you're actually doing. So they say, okay, Mr. Handyman, you're doing carpentry, plumbing, electrical, whatever the case is. We put all these classifications into the system, and we say, what is of the 100,000, 200, 300,000 per year that you're doing, what percentage of that goes to plumbing? What percentage of that business goes to handyman work? What's the percentage of that business goes to basic carpentry? And then from there, we get a rate.
Yeah, because we're giving them the percentages, what the insurance companies want.
That's what the insurance companies want. So they can say, okay, I charge this much per 100 or per 1,000 for plumbing, this much per 100 per 1,000 for general liability for this other classification and this other classification. And they come up with a wholesale rate that we have to then apply our, what the agency fees and the surplus fees are. And then we come up with the final retail rate. And generally, when we do it this way, we can come up with a pretty good rate. But the key is to kind of know that going in, if you're a new guy, especially if you're a new guy trying to get started in a construction business, say you're just getting started, now another thing that you have to keep in mind is that, yeah, not only are we looking for admitted versus non-admitted business, but we're also trying to make sure and uncover any exposures that you might have just because you hire guys. I'll give you an example. Got this one client that does a lot of repair work, and he's like, "Oh, David, I don't need all this business, and I don't need all this insurance." And he's doing about $800,000 a year. And this client was in this $800,000 in gross sales. He had a percentage of dollars that that was accounted towards. He has payroll. His average ticket is like between $250 and $500. He sends guys out to these different jobs. Sometimes he's sawing. Sometimes he's doing this other stuff. Is doing electrical work, snaking, what have you. And we rate him as a handyman, right? And the workers' comp, while your general liability is rated based upon how much business you're doing, your workers' comp is based upon how much you pay your guys. So if you got payroll, and they audit this stuff, guys, I'll be honest with you. The insurance companies, they audit this, and a lot of them audit on an annual basis so that they can make sure they get the right rate. And in this case, this client, what he did was he was shorting the amount of workers' comp. And he came to me and said, "Hey, I got this guy who cut his finger off." I'm like, "Whoa, that was his numbers." I'm like, "What are you doing? And you're underreporting your numbers." It's fraud, and they could take you to court in the state of Texas and take you to make you report in Travis County and pay Texas Mutual. Number two, you're cheating the insurance company. I mean, you're cheating the insurance company, and it's for your client. And so you got to make sure that you're reporting the payroll. I know what people are saying. Well, I can't afford all this insurance. And you know what my response is, Carlos?
Let me guess. You cannot afford.
Can't afford not to.
Right.
Because the first time a client cuts a finger off because he's messing with a skill saw, not paying attention, cell phone rings, he's cutting a piece of hardy on the outside on this homemade sawhorse. Trust me, I know you've seen it before where a guy cuts his finger not paying attention with something, and he's not supposed to have to file, that worker's not supposed to have to file the claim themselves. You, the employer, is supposed to notify the workers' comp company. And the worst thing you want to do is make it to where you don't know if the claim is going to be paid at the time of a claim. So the insurance company will start asking questions, how much you pay your guy, how much you make, because they got to reserve money to pay for their guy's lost wages. They got to see if he's going to need rehabilitation. They got to see, and all the doctor's visits, the deductibles, all of that stuff comes into play.
And that's when the owner starts worrying.
The owner starts worrying. So the last thing you want to do is worry about that. So if you're getting workers' comp, give a fair and accurate assessment of what the workers' comp the payroll. And keep in mind, stuff can change. If your work goes up, it goes up. Don't give me what you hope to give. Give me what your payroll is. Give me what your general liability, your revenues are.
Well, it's help me help you.
Right. My job as an insurance agent, our jobs as insurance agents to protect our clients. It's not to try to get the most premium out of them or anything like that. It's to protect them. They come to us, they ask us for help on insurance. They say, Lord, the job is to protect them. So when we do it, and reality is, if you know these numbers, if you know how much what you're going to make for general liability, and it's okay to guess on general liability, we can help you with the number. It's okay to guess or just get within reason, because I know based on your general liability, I can ask enough questions to figure out what your payroll and expenses are going to be. And it's okay to guess, but we got to make them good guesses. Nobody makes $5,000 a year, and nobody makes $300,000 a year as a cabinet maker and doesn't have employees to help them hang cabinets. Whether they're 1099 employees or whether they're W-2 employees, they're still your employees.
If they solely work for you.
If they work for you on your job, it doesn't matter if they work solely for you, because say the guy comes to your job,
employee, right?
If he comes to your job and he works on your job, you control the check, you control where he goes, you control the contract, you pay him when he's done. He's your employee. It doesn't matter.
Right.
It doesn't matter if you pay taxes or not. That's tax law. The insurance company doesn't give one rat's butt about what you pay in taxes. They don't care. They don't care that you follow IRS laws. They don't care about all that stuff. They care about whether or not what it looks like in the court of law and whether or not that guy's your employee. And whether you pay taxes and you give him a 1099 at the end of the year because he don't know better or you don't know better versus a W-2, that's all up to you. In the end, if he works for you, he's your employee. If he works for this guy and you, then while he's on your job, he's your employee.
Yep.
It's different if, say, you're a general contractor and you're taking bids, and I'm a general contractor. I can make you carry workers' comp as a general contractor because I don't hire these guys. I bring them to my job site, and I got to make sure that the people on my job site have workers' comp. That's totally different than a guy hiring a guy to work for him as a labor, a skilled or unskilled labor on my workforce. That makes sense?
It makes sense. It's just like the other type of contractor that charges his subcontractors a certain percentage for the general liability plus the workers' comp.
Right.
The subcontractor, in essence, he could save thousands and thousands of dollars just applying for himself.
Right.
Do his own CGL, do his own workers' comp. And he doesn't have to work just for that one guy. He can go work for multiple contractors and earn multiple income.
It's like the marble guys we have. The marble guys we have, they could work for the marble company. The flooring company says, I'll carry your insurance, but I'm going to take 5 to 10% out of revenue out of your check.
Add that up.
Add it up. 10% is 10%. But then you get the liability on yourself, and it's 1 to 5%. So now not only can I grow my business, I can do all kinds of contracts. I can grow my business. I can hire guys, and I can just scale my business up. And I'm not tied to just that one company that I'm doing work through.
So let me ask you one thing. So if you have a working for a stone company or marble company, you're under their umbrella, can I go as a contractor work for XYZ company using their workers' comp and CGL?
No, because you're not the insured.
Right.
Only the insured can present that certificate.
The only reason I ask is so that if other guys are doing that, just beware. You go over for somebody else, you're not covered.
Right.
That's why it's important to have your own coverage.
Get your own. So those are just some little tips. So number one is classification. Make sure you're the right classification. If you're doing a bunch, consider how much you're doing. And if you're doing a lot of landscaping, or let's talk about, landscaping, plumbers, electricians, carpenters, general
HVAC,
painters, HVAC guys, all of these guys, you're right. All of these guys you can get policies start at $800 to $1,000 a year. And we're talking $1 million worth of coverage. Yep. And in return, you can do so much business on your general liability, and your workers' comp is going to be rated based on the type of business. We hadn't even talked about the tile guys. We haven't talked tile and marble and terrazzo guys. We haven't talked about your flooring guys. Your guys that do like carpentry, hardwood floors, that what have you. All of those guys out there, if they get their own policies, then they can actually have more control in their business. They can present it to more places. They can get more contracts, and they can make more money. And absolutely. I think making money is a good deal. You tell me.
Yeah, that's a good deal. You can't lose. Nothing but gain.
And then on workers' comp, same thing. Workers' comp, you want to get your own workers' comp, because if something happens, you're not beholden to worrying about whether or not that guy that got hurt has to pay what he's going to have to go through in workers' comp, whether it's even real workers' comp or accident medical or something like that. You got actual coverage, and you just tell him go to the doctor. Is covered under Texas Mutual or Hartford or Travelers or whatever company it is, or whatever the company is. So the moral to the story is, really, when you're shopping for business insurance, you're really shopping to do it right. So you want to have the right classification. You want to make sure and get it on your own so that you can actually grow your business. You can control your business, and you want to keep you want to keep decent records of what you're doing. Get your wife, your brother, your sister, somebody to do the books. That way when Carlos says, hey, what percentage of landscaping are you doing, Mr. Excavator? You can say none, or 1%, or that's 10% of my business.
Going back a few steps back regarding workers' comp, dividends.
Texas Mutual gives dividends. That's about the only company I know that gives dividends. And I don't want it to make it a plug for them, but yeah, I have some people right now that will not leave that company because we wrote them. They were superior businesses. Starting year 3, they started getting dividends. They started getting checks back.
Be safe. In other words, be safe.
Be safe.
That's how you get their dividends.
Follow the rules. Because here's the thing: you have claims. OSHA might call you and say, let's see how safe your business is.
Yeah.
They actually call people. I had that guy I was talking about, that guy just got his finger sawed. OSHA called that guy, and he started calling me about OSHA checklists and safety checklists and all of this stuff that he's supposed to have, and he didn't carry it all. And I was like, yeah, but if you would have done right, gone to the training that was offered by the workers' comp company, because they want to make sure you do the stuff right, because they want to take care of their clients. They don't want to be in trouble. That's what you buy it for. If you follow those rules, you won't have to worry about OSHA checklists.
Yeah, well, not only that, we can, and while we're doing the interview process, we can just find out if you may be covered, but there might be some gaps in your coverages. That's where we can just come in and consult.
One gap that I see all the time with construction guys are the guys that have like the Bobcats. They have the dually pickup trucks with the 12, 14-foot long trailers, and they put a Bobcat or a little tractor on it, and it's over the DOT limit. And all it takes is one DOT guy to see you and say, "Hey, stop! I want you to drive over these scales." And then that's when you see the trailer on the side of the road with the tractor, and the truck has left it, because he can't move that truck. Otherwise, he's going to get put in jail or whatever the DOT does to guys that are carrying basically commercial vehicles, driving as a commercial vehicle. So there's all kinds of gaps out there, and I don't want to make this video too long or anything, but
right.
I mean, that's what our job is to kind of expose those things, make sure it's done right. And it's not just to quote rates and just give you the lowest rate; it's to do it right, give them the rate.
And we're going to ask a lot of questions.
And really the phone calls, if we ask all the questions, the phone calls take 5 minutes. It takes a lot less time than this video does. And so, I mean, if you're looking to find out more information, whether you're new in business or whether you've been in business a long time or your experience, give us a shout. We're here every day. David, Carlos, we're gonna try to do more videos on the construction stuff.
No try, we are.
We are. Yeah, 2019. We said we are.
Not only that, but we got business owners, business owner policies to talk about.
Mm-hmm.
Auto insurance, homeowners insurance, you name it.
Commercial property, you name it. General liability, workers' comp, commercial property, commercial umbrella policies. A lot of these guys, you need all of these to get these bigger and bigger contracts. And the bigger the contract it is, the more robust the requirements are. And they're, for the most part, most of them are very similar. They're in whether they need additional assured waiver, subrogation, all of that stuff. It's too much to go into in one video, but just remember, classification is everything. The amount of business you're doing, the amount of payroll that you have. It's okay to guess in some cases, and just be prepared to answer the questions. Phone calls should take 5 to 10 minutes, and like for the one carrier, we get the rate the same day. We get the general liability and workers' comp rates the same day. Commercial auto rates we get them the same day.
Right.
So what I'll do is I'll post this online. I'll post a link once we're done with the video. That way you can give us a shout or visit the URL on the website if you have questions about your business and how much and what about insurance, about how to get covered under your business, and that way you can take your business to the next level. You got anything to say before we cut off today, Carlos?
Plus, subscribe to our channel.
Subscribe to the channel if you want more information about insurance, whether you're, like I said, whether you're new in business, whether you're an insurance agent, whether you guys are just your glutton for punishment, you want to hear guys talk about crazy insurance stuff. One day we might be talking about crazy stories. The other day we might be talking about business insurance, specifics about certain policies or companies. Whatever the case is, subscribe. We'll try to make it entertaining. We'll try to make it enlightening, and we'll try to make it informative. In fact, we will, and we'll do more and more videos in the next year.
Sounds like a plan, David. We'll be talking to you soon.
Until next time, I'm David Berry, and this is Carlos Salazar, txinsurancepro.com, and we thank you for joining in.
Thank you. Bye now.
Yep.